Good morning, distinguished guests, dear participants, ladies and gentlemen. My name is Nena Nwabufu. I am the Vice President for Regional Development, Integration, and Business Delivery at the African Development Bank, the AFDB. It's my pleasure to welcome you to this important side event convened by the Agence Française de Développement, AFD. I'm honored to serve as the moderator for this morning's discussions, and today we'll delve into the vital role that local financial institutions, which I'll call LFIs from now on, play in achieving universal energy access by 2030. Some of you recall that the AFDB Group and the World Bank Group hosted an African Heads of States Energy Summit last month in Dar es Salaam, Tanzania. The objective of seeking collaboration from governments and partnerships from MDBs, financial institutions, bilateral donors, private sector players, and philanthropists to accelerate electricity access for 300 million Africans by the year 2030. This initiative has been baptized as the Mission 300 or M300. It's truly inspiring to see such a distinguished group of representatives from financial institutions, development partners, and energy sector stakeholders. Your presence today reaffirms our collective commitment to accelerating energy access and driving sustainable development in Africa. Ladies and gentlemen, the echoes of the Africa Energy Summit in Tanzania still resonate strongly, reminding us of the urgent need to accelerate progress towards universal energy access to improve the quality of lives for people in the continent. The ambitious goal of providing 300 million Africans with access to electricity by 2030 is within reach, but it demands concerted action, innovative financing, solutions, and strong partnerships. The summit solidified political momentum with 48 countries endorsing the Dar es Salaam Energy Declaration by the African heads of states, who committed to accelerating policy reforms, working to achieve regional integration, and accelerating universal access to electricity and clean cooking solutions. During the summit, 12 countries presented national energy compacts, outlining clear targets for energy access, renewable energy expansion, policy and regulatory reforms, and transformation of utility services. The World Bank announced commitment of $30 billion, the AFDB, $18.2 billion, the Islamic Development Bank, $2.65 billion, the Asia Infrastructure Investment Bank, between USD 1 to 1.5 billion, the OPEC Fund, $1 billion, and the AFD, 1 billion euro. Also, the African Guarantee Fund launched the Mission 300 Local Currency Guarantee Facility, a groundbreaking initiative to mobilize $5 billion to support energy access projects across Africa by financing for SMEs in the distributed renewable energy sector. And Total Energies committed $400 million for LPG clean cooking and $500 million for mini grids. It's important to note that the private sector expressed strong commitment to accompany the countries in achieving their ambitions and targets under the Mission 300 initiative. Also, during the summit, $1 billion Zafiri Fund, supported by the AFDB, the Rockefeller Foundation, and the IFC, was launched to accelerate decentralized renewable energy. Today's session on the role of local financial institutions, LFIs, to unlock universal energy access is designed to build on the momentum generated in Dar es Salaam. We will delve into the pivotal role that LFIs play in translating global commitments into tangible results on the ground. LFIs are the lifeblood of our economies, possessing a unique understanding of local context, needs, and opportunities. They are essential for mobilizing the necessary capital, fostering local entrepreneurship, and driving sustainable energy projects to scale. While significant progress has been made in expanding energy access across Africa, significant challenges also remain. Financing remains a major bottleneck, particularly for last-mile connectivity and off-grid solutions. Traditional financing models often fall short in addressing the specific needs of local communities and small-scale energy projects. This is where LFIs, with their local expertise, can make a transformative difference. I'm confident that by working together, we can unlock the full potential of LFIs and empower them to be catalysts for transformative change in the energy sector. So let us seize this opportunity to reaffirm our commitment, deepen our partnerships, and accelerate progress. Thank you very much. Now, I'm pleased to introduce our keynote speaker. What I just gave was the introductory remarks, by the way. So keep the larger clap for this keynote speaker. Ms. Damilola Ogunbiyi, who is the CEO of the Sustainable Energy for All, C4All, who will share her insights on the importance of financial mechanisms in achieving universal energy access. Please, you're welcome, Damilola.
Excellencies, honorable ministers, esteemed colleagues, ladies and gentlemen, thank you for having me here today. I'd like to thank Agence Française de Développement, AFD, the Development Bank of Southern Africa, and the Asian Infrastructure Investment Bank for co-hosting this very, very important gathering. Sustainable Energy for All, the UN, AFD, and many stakeholders in this room share a common ambition to accelerate energy access in Africa. We share the conviction that energy is the lifeblood of sustainable development, the cornerstone of industrial growth, a critical enabler of social transformation, and the foundation of climate resilience. Despite financial institutions, particularly multilateral development banks, commercial banks, and development finance partners playing a pivotal role in accelerating energy access, achieving energy access is not a task for only financial institutions. We need greater collaboration from governments here today, private investors, development partners, and philanthropies to unlock the full potential of energy investments needed for low and medium income countries. Ladies and gentlemen, we are already seeing how public-private philanthropic partnerships, which we've tagged 4Ps, are driving the rollout of clean energy solutions. Like my colleague said earlier, one of the most ambitious initiatives in this sector that I'd like to highlight today is Mission 300, an initiative by the World Bank and the African Development Bank to connect 300 million Africans to electricity by 2030. So again, with the African Development Bank and the World Bank, alongside the Rockefeller Foundation, the Global Energy Alliance for People and Planet, and Sustainable Energy for All, we're all working together to spearheading efforts to scale up investments in utility-scale solar, grid expansion, on-grid renewables, decentralized renewables, and clean cooking. I'm particularly encouraged by the new momentum created by the partners to ensure the success of Mission 300, which you heard about with the conference in Dar es Salaam. In my view, Mission 300 is not just about giving people access and connecting them to a few light bulbs and a charger every day. It's about giving people a real chance for increasing their productivity and enriching their life. To illustrate my point, Tier 1 access is the equivalent of energy consumption for 22 kilowatt hours per person per year, where the world average consumption per person per year is 3,081 kilowatt hours. So when we talk about just, and we talk about transition, and we talk about helping people, we need to realize that the quality of energy that we put into the space is also important. This disparity neither supports or improves the quality of life nor economic growth. We simply cannot be satisfied providing poor solutions to what we call poor people. We must seek to solve the energy access challenge with a commitment to giving power for everyone to actually live a dignified and productive life. This is why Mission 300 has benefited from the leadership of African policymakers and also utilizing local African developers, working with key stakeholders, including international financial institutions, throughout the process of implementation. Ladies and gentlemen, SE4 is also working with key partners to ensure that electrification projects are more resilient to market volatilities and better aligned to the local economic conditions. We're championing local currency financing, like was said earlier, supporting what the AFDB is doing, which is quite groundbreaking. But we're also looking for ways to mitigate the risk associated with currency fluctuation, which have historically been a big barrier to long-term infrastructure investments on this continent. This also strengthens the role of local financial institutions, which is what we're here to talk about today, and the domestic capital market in supporting the energy sector. So to give you an example, in my country, Nigeria, we are supporting distributed renewable energy, working with Africa 50 and the Nigerian Sovereign Wealth Fund and a cohort of Nigerian pension funds to establish a fund for distributed renewable energy, leveraging the 750 million Nigeria Distributed Energy Access Renewable Scale-Up Project, which is a World Bank project with the Nigerian government that is administered by the Nigerian Rural Electrification Agency. This coalition will work with multilateral development banks to create a financing model that can be adapted to other countries. I believe what I'm trying to say here is that if we do not take our different countries seriously and have our capital markets strongly involved in the solution, we will not achieve our Mission 300. With less than 5 years to go to 2030, the end line of the Sustainable Development Goals, we need to push for higher ambition, greater financial flows, increased localization, and faster results together. Ending energy poverty should not be something that we think it's a nice to have. It has to be the utmost, and we have to recognize that we cannot leave anyone behind. The road ahead is challenging, but we must do this in greater collaboration. I am confident that with these partners in this room, we can recognize the need for stronger collaboration to promote sustainable energy solutions, mobilizing financing, and enhancing knowledge sharing to achieve meaningful impact in the energy sector. And another example for this is the work that AFD is doing on digital energy platforms across Africa. So to conclude, I look forward to the discussions and the deliberations that we're going to have today that will accelerate actions to ensure everyone, everywhere, can live a dignified life on a healthier planet powered by sustainable energy. Thank you for listening.
Yeah. Thank you, Damilola, for those remarks, and we're excited to hear about all the partnerships and the possibilities that exist. Now, we have a distinguished group of panelists, and each one of them brings a wealth of experience in energy finance and development. And I'll just quickly introduce our panelists. If I introduce you, just wave. So, I think the names are there. So, Ms. Mary Kamari, she is the Executive Director of the Trade and Development Fund, and she leads corporate affairs and investor relations at the Trade Development Bank, with extensive experience in mobilizing resources for development finance. We also have Ms. Sasha Cook, who is the Head of Sustainable Finance at Standard Bank, and she has a strong background in structuring finance solutions that integrate sustainable principles into banking and investment frameworks. And she told me that they just closed the deal. So I hope that deal is related to what we are talking about today. Next, we have Ms. Ellen Demact, President and founder of Gaia Impact, a venture capital firm specializing in renewable energy investments that drive both financial returns and social impact. Next, we have Mr. Andrew Heskowitz, who is the CEO of Mission 300 Accelerator, leading initiatives to coordinate and support investments in expanding energy access across Africa. And last but not the least is Ms. Jadwiga Semikolenova, who is Energy Practice Manager for the Eastern and Southern Africa region at the World Bank. Once again, let's welcome all our panelists. My first question goes to Mary. And Mary, public development banks play a crucial role in bridging financing gaps for energy access. And given the scale of investment needed, what specific financial instruments can public development banks deploy to mobilize more capital? And how important is local currency financing in unlocking private capital for scalable energy solutions?
Good morning. Good morning, everyone. Thank you, Madam Nena, for the question. This morning you started with a number of 600 million people with no access to electricity. But on the flip side, there's also 1 billion of people that lack or have no access to clean cooking. So for us to be able to achieve SDG 7 and 13 requires significant funding. And I'll give specific example of how we've been able to mitigate or contribute in that. So with the quantum required for us to achieve our goals, we require different innovative instruments that we're able to achieve the goals. At TDB Group, we've been able to finance and intervene in different across the value chain in generation, and we're seeing a lot of opportunities in transmission and distribution. How have we been doing that? Through syndication, of course. We are not able to do it alone. Partnership is very key. Syndication, we've co-financed some of the projects in different countries. The major project you're very well aware, Madam Nena, will work together on the Lake Turkana, which is a flagship project in Kenya. But most importantly, recently, we've been able to get a lot of innovative financing solutions from the World Bank. At the moment, my neighbor here were talking about the innovative solutions that we're providing. We've been able to get specific financial instruments from the World Bank. Currently, we have around $1.5 billion from the World Bank in the same sector of energy, which is very critical. We got money which is concessional, as well as technical assistance and grants. So the question we've been asking ourselves, each conference has been, the money is available, but deployment is a problem. So what we've been able to come up with at TDB, we've been very innovative. We've created a specific vehicle called TDF, which is a ADF or IDA window of the World Bank. So being able to look at the project development stage, and we're able also to work with the banking side to be able to finance these projects. But of course, we cannot ignore the partnership required with the government. The government is very key to provide enabling environment. So the instrument to your question, the instruments are there, but the question is on the how. Related to the currency, the local currency, very important. We've been also been able to issue local euro bonds for us to be able to finance projects that require, of course, the local currency. As you're aware, the energy sector requires the local currency. So we've been able to issue local bonds. We've also participated in the transactions at the local scale, at the local level, using the local currency in our member states.
Thank you very much, Mary, for your crucial insights, and we are pleased to hear about what the TDB Group is doing in this space. Now, I'm going to turn to Sasha. We know that despite the urgent need for private sector financing in energy access, local banks still play a limited role. What are the key barriers preventing greater investment? How can risks such as currency and demand risk be mitigated? What products have PDBs developed to encourage local financial institutions to invest in Africa's energy transition? Sasha, please.
Good morning, everyone. I feel like there were quite a few questions in there, so I'll try and address them. Let's start with some of the barriers preventing commercial banks or local financial institutions from investing more heavily private sector investment into this sector. I think some of the key barriers will include regulatory policy enablement challenges, the lack of clear, stable, long-term policies that support renewable energy rollout and decentralized or privatized energy. If I look at some of the successes that we've had in South Africa, our renewable energy independent power program is a good example of success here. It's essentially a competitive bidding process designed to attract private investment into the renewable energy sector. And it is accompanied by our integrated resources plan, which outlines South Africa's long-term energy plan. We also fairly recently saw an increase in the licensing threshold from 1 megawatt to 100 megawatts. That was a fundamental unlock that facilitated an unlocked private sector investment into this sector. And there have been some unbelievable examples. As a bank, we've actually set a specific renewable energy financing target for ourselves over a 3-year period from 2022 to 2024. We set a target of 65 billion rand of financing to mobilize new renewable energy capacity. And there's some amazing examples, particularly in heavy industry sectors like mining, where clients of ours, we've supported clients like Northam, it's a mining company, like Seriti, which is again a coal mining company, to fund decentralized energy projects, both solar and wind. Another success story for the South African context is where the government actually integrated utility-scale battery energy storage solutions into their renewable energy power program, assisting with stability and improving access to energy supply. And we recently reached financial close again on 2 of those battery energy storage programs. Financial stability is another challenge. And I think financing risks and challenges you can kind of slice and dice in many ways. We've spoken to some extent about the foreign currency challenges. There are challenges in terms of depth of financing capacity, particularly in local currency, the need to develop that local currency financing to prevent an over-reliance on dollar financing structures. And I think the ability to fund tenors longer than, call it 7 years, is sometimes also a challenge in certain of these markets. And then another aspect on the financial challenge would be, we are a commercial bank, so the credit worthiness of off-takers is a real challenge. I'm going to try and touch on some of the other questions briefly. And just to remind everyone, the other question was, what are the main risks? I think we've touched on those to some extent. Political, regulatory uncertainty, the financial risks I've touched on, and the environmental and social risks, which I think are really critically important in this space, particularly on the social side, the need for intensive community engagement in these various areas and communities where we're looking to roll out solutions. Another risk, particularly relevant in the South African context, but across the continent more broadly, is the lack of transmission infrastructure investment and the need for a bankable framework to actually invest in transmission infrastructure. In the South African context, due to grid capacity constraints, there were certain areas that additional renewable energy capacity could not actually be rolled out without investing in transmission infrastructure. Then maybe just to touch on some of the, what are the potential solutions and what can we be doing to mitigate some of these challenges and risks? It really will come through, I think, in a lot of the discussions today, but a better use of blended finance. We use that term very often, and I think that it really does hold a lot of the unlocks here. The ability to slice and dice different risks associated with these projects and bring in parties that have got appetite or mandates to take on differentiated risks and work together is critically important. We absolutely work with DFIs and MDBs, and there are significant and important products, as you say, that are already available in solutions like guarantees. We've had co-investment opportunities, we've had equity financing supporting some of these transactions, political risk insurance, first loss guarantees. These are all critically important. And I think maybe one of the key last points I want to make, which Helen and I touched on a little bit earlier, is the need to really understand the local nuances. A solution that works in country A is not necessarily going to be a cut and paste that will work in country B or D or Z. So I think the need for a real in-depth understanding of the local challenges and who the players are and who the parties are that can help unlock and mitigate some of those risks is critically important.
Okay, thank you very much, Sasha, for those insights. Now, Ellen. Bonjour, Ellen. As an impact investor, you have been deeply engaged in equity financing for energy projects. How do you assess the market's evolution, and what role can capital markets play in attracting institutional investors to this sector?
Thank you very much. Thank you very much, Nina. The question here for me specifically is how can public and private financial institutions together contribute to achieve Mission 300's agenda? What are the most successful models of collaboration optimizing our global impact? My purpose is here to find the best ways to support local companies that will contribute to the economic development of the continent, starting from the bottom up, early stages, startups, SMEs, to growth stage enterprise. So in the recent years, degrading macroeconomic situation provoked a significant decrease in capital inflows for energy access in Africa. So all VC investments in particular have decreased because of political and economic instability, currency fluctuations, and also exit challenges. All these factors have increased the funding gap. Equity, in particular, is getting scarcer, and this is seriously limiting the DRE, the decentralized renewable energy sector's growth potential. So the role of private funds is to finance early-stage innovation and help companies become investment ready for PE funds or DFIs. So it is with this objective in mind that I started and I launched Gaia Energy Impact Fund in 2016. Our aim at Gaia is to foster the African energy transition by supporting seed to growth stage energy entrepreneurs. We support them with technical, strategic assistance and provide equity capital for their journey towards scalability. And I am very proud, I must say, to have raised private capital from corporates such as Schneider Electric and European family offices. But to be honest, it was not an easy task because investment in Africa is considered high risk by private investors. So the best instrument that would leverage privately funded funds like Gaia Energy, attract more capital and scale impact is blended finance. I'm the third one to underline it. So de-risking tools provided by public development banks or philanthropy, such as concessional funding, partial guarantee, or first loss layer, would play a major role to exert a strong leverage effect on energy-focused venture capital PE, like Gaia, for example. In our case, as equity investor, it would be greatly additional, and at two levels, at the fund level and at the company level. And At the fund level, we've had the experience of co-managing a facility called Digital Energy, launched by the EU and AFD, to select and support early-stage companies in the energy field, going through a process of digitalization. And it was a definitely catalytic model to support local businesses. At the company level, I just want to finish by sharing two examples among our portfolio companies to illustrate the importance of blended finance. So I want to talk about Easy Solar in Sierra Leone that some of you might know. They're reached over 1 million beneficiaries. They have 400 sales outlets across Sierra Leone and Liberia. Their impact is great on women youth employment. They have around 20% market share for all energy solutions in Sierra Leone. They reach this systemic target mostly by mobilizing private and philanthropic capital plus DFI funding. After massive recent devaluation of local currency, the company needs new dedicated financing options like RBF programs, blended finance, because they are key to reach global access and to maintain impactful last-mile operation with hundreds of local jobs. My last example is about energy efficiency in Nigeria. Beacon Power Services, the team at BPS started up in Nigeria, a country where outdated distribution infrastructure leads to frequent power outages. Nigeria concentrates nearly half of the 6.5 million diesel generators used across Africa, and there might be more. BPS is addressing these issues head-on with innovative data-driven solutions. They learn to start from scratch to fully digitalize utilities distribution networks, allowing utilities to recoup millions of dollars in lost revenues. So reform of utilities is a key item of the African energy agenda. To support implementation of such cost-efficient public-private partnerships, the public sector needs to take the relay. Blended finance is key to fast-forward massive underlying CapEx needs, starting with smart meters rollout to turn distribution networks into predictable assets. So tackling persistent energy poverty in Africa requires the effort of multiple partners: national governments, development institutions, communities, civil society organizations, and businesses. I'm just quoting the World Bank here. And as a privately funded fund, I ambition to play my specific role and collaborate with all actors providing blended finance tools. And I believe it is how we reach 300 million beneficiaries by 2030. Thank you very much.
Thank you. Thank you, Ellen, for your thoughtful perspectives. Now, Andrew, as CEO of the Mission 300 Accelerator, how is the initiative supporting the Mission 300 agenda? What role do national and multilateral development banks play in mobilizing necessary investments, and how can they be empowered to support integrated electrification plans?
That's a lot of important questions, but I want to just start by addressing really what is the elephant in the room, which is the freezing of foreign assistance from the United States and reduction of foreign assistance that was announced from the UK yesterday. But the reason I highlight this is because that makes this summit incredibly, incredibly important. USAID over the last few years was heavily focused on the localization effort, with the idea being that they would program as many resources as possible through local institutions. And I was always critical of that. Not that that wasn't important, but my response was always, well, what's going to happen when USAID money suddenly disappears? You've now built all these local implementers, but you're still dependent on a funder. And if that funder's not there, then you've actually done more harm than you've done good. And now we're seeing this play out. And my view always was been the most important thing that we can do is support the national development banks and the public development banks in countries, because they're designed to be sustainable. They're designed to make sure that there's financing available. And so that should be the major lesson for everyone here, is that we have to, as public institutions, as donor countries, as philanthropies, doing everything we can to support strong national development banks and public development banks, and even the MDBs and the large DFIs need to be providing financing to the national development banks and the public development banks, and not in a way that they're going to make money, that the DFIs and the MDBs, but they need to provide low-cost capital. They need to act like the public institutions that they are, so they can leverage the amount of money that they're getting from their taxpayers in the countries to make sure they're building longer-term sustainable institutions. That's how we're going to achieve Mission 300. Mission 300 aims to bring 300 million Africans access to electricity by 2030. Why are there so many people who don't have access to electricity? Of the 600 million people in Africa who don't have access to electricity, 78% of them can't even afford the $5 a day not needed for a solar home system. Okay, $5 a month. I take it. So $5 a month for a solar home system. So we need to aspire to higher levels in Tier 3, Tier 4, Tier 5. We need to make sure that people have at least a light bulb and cell phone charging. We need to provide people with what they can afford. I'd like a bigger house. I can't afford a bigger house. So we need to figure out, how do you get down the cost of financing? And that's where the multilateral development banks and the regional development banks play a role in providing low-cost financing. Mission 300, we see an unprecedented commitment to bringing low-cost financing. Between IDA and the Resilience and Sustainability Trust Fund money and Africa Development Fund money, we're looking at $30 to $40 billion of concessional capital, and some of that will be grant money as well, which is unprecedented coming from the World Bank and African Development Bank. But we need to do more. Philanthropy is coming in. Rockefeller Foundation, the Global Energy Alliance for People and Planet, and working closely with Sustainable Energy for All. We're trying to fill all those gaps to make sure that the pipeline of projects that the World Bank and the African Development Bank have identified to provide those 300 million people with access to electricity actually move forward. So what the accelerator is doing, we're doing a variety of things, including providing technical assistance that's targeted to making sure that the World Bank and African Development Bank can deliver on those projects that they have. They have a portfolio and they have a pipeline of projects. We all know that things get stuck for a variety of reasons. Sometimes it's that the government itself doesn't have the right people in place to help implement the projects. So we've set up a fellowship program where we're hoping to embed people in different compact countries so that governments have extra sets of hands. That's just one small piece of it. We're providing technical assistance to help governments figure out how to do grid densification, grid expansion, how to do solar home kit distribution. But we're relying on our colleagues, the government officials that are on the ground, our World Bank, African Development Bank, GEOP, SE for All, colleagues on the ground to tell us what's needed to make sure these projects move forward. So we need to reduce the cost of financing. My colleagues from the World Bank might mention this, but I'll just quickly say that even with the IFC, we're working on a way to reduce the cost of capital by creating an equity fund as well, so that a lot of the mini-grid companies out there, it's difficult for them to scale because they don't have the working capital that they need. But if we can get them that working capital with large equity investments, it'll allow them to do both bulk procurement to help bring down the costs, but also have that working capital. Some of the challenges that I've seen, and I'll just be honest, I think a lot of the philanthropies and governments are heavily focused on planet, not focused on people. A lot of the money is going into what's going to be the new green industrialization plan for whatever country. Let's focus on getting the 600 million people who don't have access to electricity, a light bulb, before we start thinking so big. I'm not saying that thinking big isn't important, but we need to put the money where we know it's going to produce a result. There will be no energy transition if people don't have access to electricity. You look at a country like Nigeria, where you see 10 times the amount of electricity that's produced from diesel gensets than is produced from the grid. And that's because people will look for any energy source that they can to meet their needs. We need to focus on getting people and businesses access to electricity, and that's what's going to help us achieve our goals and achieve our climate ambitions as well. Thank you.
Thank you. Thank you, Andrew, for highlighting these critical challenges, opportunities, and what needs to be done or not done. Now, Jadwiga. You are the last, but I know certainly you are not the least, not with $30 billion to invest in Mission 300. The World Bank and the AFDB are key players in Mission 300. What financial innovations are crucial to accelerating electrification, and how can partnerships between governments and financial sector unlock more funding for energy access initiatives?
Thank you, Nene. As you, Damilola, and Andy just said, the big goal of Mission 300 is to connect 300 million Africans to electricity by 2030. It cannot be done with public funds alone, which means that the private sector has to step up and has to come in at scale. Oh, thank you, Andy. And for private sector to come in at scale, and especially in distributed renewable energy space and dairy space, they will need debt in local currency, they will need equity. And this is where local financial institutions come in, because they're perfectly positioned to provide loans in local currency, but most importantly, they know the local markets. However, there is this huge space for financial innovation, because again, for the DRE space to scale up so fast, to deliver, a lot of thinking needs to go and a lot of partnerships needs to go, because commercial institutions by themselves will not be able to enter this relatively new market for them. So the government should work and create incentives for the financial sector to actually do something different, do something which is fit for purpose. And this is where we come in. And this is a complete change in how this sector thinks and how this sector works. 10 years back, if you talk to local companies whether they would like to partner with the local commercial banks, the answer would be no. It's too expensive. And the reason was because the local banks, they didn't understand the business, they didn't understand the business model, they didn't understand the risks. So all of the financial instruments or products that were offered, they were either too expensive or very short tenor or required incredible collateral which nobody could use. And if you talk to the governments and say, look, how about we create a line of credit that we will channel through your development bank, through commercial banks, to local companies to incentivize access, they were like, why would we use our money to give it to private sector? They should bring their own. This mindset is completely changed right now. And what we observe on the ground is this huge collaboration between financial sector, local financial institutions, governments, and us, who try to bring everybody together and come up with new models of working. I'll give you a couple of examples. We started working in Malawi on to facilitate private sector participation in access space right before 2023. And when we looked, and the government basically said, let's create a fund that will help this dairy industry to come in and help us accelerate access, because at the time access in Malawi was 14%, was one of the lowest electrified countries in Africa. When we looked, the problem was that the companies had to import systems, pay dollars, but sell in the local market in Kwacha, and Kwacha was depreciating horribly. So all of these systems were basically unaffordable because the companies were pricing expected rate of depreciation, and it was just too high. So the way we designed the fund with the government was, we're going to give debt in local currency to companies, but we'll also allow direct dollar payments for their inventory. So that alone allowed decreasing the cost of the systems by 30%. So that boosted up sales immediately. But then we also saw that there was still affordability gap. So you could only reach, richer urban, peri-urban population, but it still wouldn't go to rural areas. And this is where results-based financing is important, or essentially consumer and subsidy. So the product that was introduced to the companies was, look, you're going to get a certain subsidy for the system, each system that you install, but you have to install, we will verify, and once we verify, you receive this money. So these loans in local currency, direct payments in dollars for inventories, plus results-based financing essentially boomed the dairy market in Malawi. And right now it is the fastest growing dairy market in Africa. And between 2023 and today, the access rate actually doubled from 14% then and over 26% now. So another good way of collaboration is with my friend here, Mary, who was very humble talking about what actually cool things we do together. So we just launched together the debt facility, which is regional for Eastern and Southern Africa. Basically, TD Bank will extend loans in different countries in different currencies, but it's like one umbrella. So if a company works between different countries, it doesn't have to go to gazillion different places into fundraising. And what Andy was saying, that what we're working with him and our private sector arm, IFC, to complement that with an equity facility. Again, regional, so the companies who are working in different countries could raise equity. And additionally, we're also working with TDB Bank and we just launched the results-based facility. Again, it's not country-based, it's regional. So it will be a complete game changer for this space. So if I, as a company, work in different countries, I don't need to apply for gazillion different results-based facilities and comply with different rules. There will be one big umbrella results-based facility which allows companies to expand where they are, but also enter new markets that they were considering. And another cool thing that we're actually thinking with TDB Bank is to enter the carbon credits space. There is a lot of money there which hasn't been tapped, especially for access. So what we're thinking is to use this new remote tracing technology to identify where all of the systems and mini-grids were installed, used our results-based facility and kind of aggregate it in different portfolios. And then use these portfolios to find buyers for the credits. And this actually eliminates gazillion of transaction costs for companies for whom it's too expensive to go and look for buyers for their small portfolios. But it allows actually to aggregate, work on it on the portfolio level and tap into this huge financial opportunity that could actually boost results-based and access in Africa considerably. So to answer your question, Nenny, there is a lot of innovation, a lot of potential, and we see that this collaboration between financial sector, local financial institutions, governments, and us development bank is blossoming, and I think there is a lot of space for all of you to participate in it. Thank you.
Thank you. Thank you very much for those insightful facts. Now, I would like to ask everybody just to give all our panelists another round of applause for sharing their expertise. As we are coming very close to the end of the session, I'm pleased to invite Mr. Wong Ching-om, CEO of Global Energy Alliance for People and Planet, to come over and deliver his closing remarks. You're welcome.
Good morning, everybody. It's great to be here. I would like to start by thanking all of you for dedicated partnership and collaboration in this regard. It's a true privilege to be part of this landmark summit, where we come together with a shared vision to drive meaningful changes in the energy sector. At the Global Energy for People and Planet, GEAP, our mission is clear: to accelerate the energy transition and ensure universal energy access by 2030. Achieving this will require bold action, new public-private philanthropic partnership, PPPP, and scaling solutions in innovative ways. The private sector plays a pivotal role in helping us get there. By driving catalytic investments and supporting the creation of bankable projects, we can transform energy systems and ensure equitable economic opportunities for all. Access to electricity, a fundamental driver of economic growth, social development, and improved livelihoods. While international financing plays a crucial role in advancing electrification, domestic capital is often the backbone of successful large-scale energy access initiatives. For example, India's journey towards universal electrification was significantly driven by domestic capital, primarily through the government-led initiatives. Key example is the Jyoti Yojana, which focused on providing free electricity connections to rural villages. South Africa, too, has been very successfully mobilizing domestic capital to drive the rapid uptake of distributed renewables. By 2016, of the more than $14 billion invested in the Renewable Energy Independent Power Producer Procurement Program, more than 70% was domestic capital. Today, South Africa is talking about potential pipeline of 60 gigawatts of green energy with this experience. Local financial institutions are not just lenders, they're essential partners in sustainable development. And there's a good reason for this. It is often local financial institutions who have market knowledge, proximity to users, and the ability to finance complex projects in hard-to-reach areas of difficult times. These banks are uniquely positioned to enable millions of people to access affordable and reliable clean energy, which in turn fuels economic growth, creates jobs, and reduces inequalities. Public development banks, in particular, play an indispensable role in unlocking capital, de-risking investments, and facilitating vital public-private partnerships. They are the cornerstone of Africa's financial sovereignty, reinforcing African ownership of African development. Uniquely positioned to mobilize local resources, de-risking private sector participation, and channeling capital into critical sectors like infrastructure, energy, and climate finance, PDBs are indispensable in this regard. One of the keys to success is ensuring that these institutions have the tools and knowledge to provide financing for renewable energy projects. That's why we are so proud to have worked with partners like Chapel Hill Denham to bring pension funds to local currency financing for infrastructure in Nigeria. And also why we are excited to be working with local financial institutions in Latin America and the Caribbean to mobilize at least $1 billion in energy access initiatives through the Universal Access Coalition with partners like the OLADE, the World Bank, IDB, IEA, and IRENA. The Alliance actively partners with a broad range of private sector stakeholders to unlock finance and create investment-ready projects. We also work with private sectors to overcome the barriers that are holding back investments in renewable energy and other sectors as well. Currently, many international investors are hesitant to engage with the projects in low and lower middle-income countries due to concern about the risks and lack of market development. GIAP and its alliance play a critical role in addressing institutions, build their capacity, and create a pipeline of bankable projects. And now there's Mission 300. Africa accounts for 80% of the world's unelectrified population, with nearly 600 million people still without access to electricity. The path to universal electrification in Africa will be defined by homegrown financial solutions, innovative partnerships, and unwavering commitment, and we stand ready to support this transformational journey. That is the reason why we are immensely proud to work with the World Bank, the African Development Bank, Sustainable Energy for All, Rockefeller, and others, and on this important initiative. In Nigeria, InfraCredit and Sovereign Investment Authority are playing a pivotal role in unlocking capital for energy access. Meanwhile, the Southern and Eastern African Trade and Development Bank's regional facility in COMESA is mobilizing resources to expand electrification across multiple countries. These institutions, along with other local financial actors, are critical pillars of the Mission 300 effort, ensuring that financing reaches the communities that need the most. Our work with InfraCredit and TBD are only the beginning. As such, we are very excited to announce that the GIAP and AFD Group are collaborating to mobilize up to $5 million to elevate the role of the local financial institutions in accelerating clean energy access in Africa in line with the Mission 300. This collaboration will begin with a $1.3 million pilot TA grant from GIAB to be complemented by the lines of credit from the AFD group. Through this partnership, we will support African banks to offer the financing required to scale up clean energy solutions and create new market opportunities for Africa. This will demonstrate the power of blending philanthropic capital with development finance to bring clean energy solutions to underserved regions. This collaboration between GIAP and AFD demonstrate what is possible through radical collaboration, joining the growing momentum among partners supporting Mission 300. GIAP and AFD Group's joint investment directs both technical and financial support to public and private development banks in Africa. While we made significant progress with Mission 300, it is clear that we still have a lot of work to do, and we need to continue building this momentum, strengthening financial systems, and scaling up clean energy solutions. The pathway forward requires continued and radical collaboration across sectors, regions, stakeholders, public, private, and philanthropy. Thank you very much, and good morning.
Thank you very much. Next, let us welcome Monsieur Rémi Rux, the CEO of Agence Française de Développement, for his closing thoughts. Bienvenue.
Thank you so much. Good morning, everybody. A few closing remarks. First, as the chair of Finance in Common, to really warmly thank you all for being here. Thanks to the partners and the panelists and to all of you in the room. Thanks to DBSA and AIIB for providing this unusual place, fantastic place for an unusual event, coalition, partnership. I carefully listened to the panel, especially to what Andrew said, and I think we're all struck by a sense of urgency and responsibility. We need to implement very rapidly the commitments that were made. Otherwise, this, I would say that the twin resentments we all feel rising will happen and gain ground. Especially we are in Cape Town here in Africa. So let's really do our best to avoid that and to do it. And we need ambitious and innovative partnerships, of course, to do it. And I really I'm here to commend the beauty and the importance of Mission 300. I was in New York last September. Many of you were already there for the launch. There was the Global Leadership Council of GIAP at that time. Damilola, Andrew, Wuchong were there. And then we were in Dar es Salaam a month ago. Many of you reminded us of this special and very important summit. We were obliged now because so many heads of state convened for this Africa Energy Summit for this very difficult issue that is challenging for all of us, that is energy access for 300 million people in sub-Saharan Africa by 2030. So thanks to the World Bank, to the African Development Bank, the Rockefeller Foundation, SC4all, and GIAP for having started this momentum, and we cannot have a clearer political guidance than the one that was set in Dar es Salaam. So there was New York, there was Dar es Salaam. Cape Town has to be the third step before others to implement this initiative. Of course, not a political step, a step between professionals, technicians, wondering well, how to be up to that task. And I heard from colleagues on the panels that there are many challenges, of course, that we have to surpass. AFD, colleagues in the room, we want to do as more as we can, of course, in the area, the field of constraints, we're already also in. So we pledged in Dar es Salaam for $1 billion of our own financing in the framework of Mission 300. So it's a 50% increase per year. So it's not a given. And Pauline, we will have to do it, but it will not be enough, of course, by far. And so the message here in Finance in Common, like Woo Chong just said it before me, is there are resources, but we need to find the instruments, the collaboration, so that we can mobilize them. And these resources, of course, and expertise, capacities are at national, at local level. And we need to find a way, innovative way for them to be empowered and play their full role in supporting SMEs, entrepreneurs, developers, sustainable infrastructure for long-term success. So really, Finance in Common is about empowering, recognizing, mobilizing not only national development banks, but also subnational, because sometimes those are at the last mile when there's a massive market failure, sometimes are this kind of institution. Of course, put them on the spotlight, help them increase their capacities, diversify their financial, technical instruments, so that they can play their role in our common endeavor with multilateral international partners. And of course, for the governments, they have to set a clear and ambitious mandate to their own institution following the policies they declared in Dar es Salaam and set with this level of ambition. So, and in Africa, you know, there are about 100 public development banks. It's only 2% of total assets in the world on the balance sheet of these institutions. So we have to make them grow, and we have very valid partners in this ecosystem, BOAD, CDG in Morocco, well, DBSA here in South Africa, TDB, well, you know many of them. Let's trust them, let's accompany them for them to provide their contribution. This is precisely, and that's my last remark, action. This is what we have decided to do together with GIAP and SE4All. And I want to thank Woo Chong and Damilola for their trust. So we will join forces, not exclusively, of course, with all willing parties on behalf of AFD. With GIAP, we will strengthen the capacity of local financial institutions to finance energy access projects, helping, and their capacity to help developers structure bankable projects. So it's really about technical assistance that is so much needed at ground level. And with SE4All, it's really about supporting the entrepreneurial ecosystem, and especially the offtake risk was mentioned in their capacity to partner with public power utilities, which is often a challenge and a problem for private investors. So I stop here. We will do the signing if I'm right, but that's already an achievement by Finance in Common. And of course, all the remarks will be factored in the conclusions. And of course, beyond these sessions, I invite all of you in the corridors, on the sidelines, to do as many deals, as many actions as possible. This is what is expected from us. Thank you very much.
Thank you. Thank you very much. We're coming quickly to the close of this session. But before we conclude, I'm very pleased to announce the signing of 2 partnership agreements in support of the Mission 300. The first one is a declaration of intent with C4All to support digital innovation in Nigeria's energy sector. And the second one is a declaration of intent with GIAP, focusing on mobilizing local financial systems, SMEs, and the entrepreneurial ecosystem for energy access. So both agreements will be signed with the Agence Française de Développement. Congratulations. Now we quickly move on to the second partnership agreement between GIAP and AFD. No. Thank you. Now I'll invite the speakers quickly just for a photograph, just here. So thank you all for joining today's session, and let's continue to take concrete steps towards universal energy access. Thank you, and see you all.